When oil prices come down, everything's going to be cheaper for the American people and actually for the world, but for the American people. So I'd like to see oil prices come down. And when the energy comes down, that's going to knock out a lot of the inflation. That's going to automatically bring the interest rates down.
Are you going to talk to Powell about this and bringing the rates down?
At the right time, I would.
See, it's very interesting, very important to know. We said this last night, and I see in the papers today, a lot of media misunderstood. Mr. Trump is saying that if and when oil prices come down, that will have an enormously beneficial impact on overall inflation. Petroleum permeates the entire economy. And then interest rates can and should come down. He's not just saying interest rates can come down right away. It's through oil. It's conditioned on a decline in oil prices. I want to make that point again. Now we bring in our guest, E.J. Antoni, from the Unleashed Prosperity Hotline, the Heritage Foundation, and Art Laffer, former Reagan economist and co-author of The Trump Economic Miracle. Welcome back to both of you. Arthur, I mean,
thank you.
Mr. Trump has a very oil-centric view of prices and inflation. And I won't say he's 100% right, but I'd say he has an important case because we've been through this many times on this show. I've read lists of, tens and tens and several hundred items that are dependent on petroleum and the price of oil. And if those costs come down, that has a major impact across the board on inflation. It's not the only thing. It's not a monetarist view. It's an oil-centric view. And then he's saying, if you meet that condition that oil prices come down and inflation, then interest rates can come down. That is how I understood it. And he clarified it today in exactly the way I tried to explain it last evening.
You're exactly correct. The interesting thing about oil, Larry, is the demand for oil is very inelastic. In other words, if you have a slight increase in supply, the price of oil can drop a great deal. It's going to take him some time with all the new drilling, baby drill, baby, and all that, to get that oil onto the market. But that should be coming onto the market in the next year, year and a half, pretty evenly. When that happens, you're going to see the price of oil drop quite substantially because of that inelasticity of demand. And when that happens, it will have a magnified effect on the price level, aggregate price level, and also, obviously, on interest rates as well. So I'm really looking forward to the oil being a major contributor to the drop in inflation and also to the drop in interest rates. You're right.
I mean, and by the way, speaking of the elasticity of supply, sorry, but there's two sides to it. You always taught me. Saudi Arabia could help. They could, and OPEC. They've been holding back on production, and that has helped Russia in the Ukraine war. And that's what Trump said at the Davos speech. I mean, he kind of put the finger on Saudis. Yeah, they're going to invest $600 billion or maybe $1 trillion. But, EJ, Trump's kind of putting a little heat on the Saudis, saying he actually said, you are helping continue that war. And he is right. Even with Brent crude at, let's say, $80, okay, 78, $80, EJ, that's higher than 60, or it's higher than 55. And the Saudis could help bring it down, help end the war, and end inflation and bring interest rates down. What do you think of that?
Well, Larry, absolutely. And I was so happy to see President Trump not only bring heat to the Saudis, but frankly, everyone, even Bank of America, for their debanking of conservatives. I mean, there is no one who is safe under this president. If you do wrong by the American people, you better watch out because he's going to come after you. And I also want to add one thing to the discussion, not only oil, but also natural gas. We forget that just a state like Pennsylvania is the Saudi Arabia of natural gas. We have actually so much of that particular energy input that we don't even use oil anymore for a lot of our chemical blend stocks. Believe it or not, a lot of engine oil that you put in your car today doesn't even come from oil. It's actually synthesized in a laboratory from natural gas. We have so much of it, it's cheaper to get a lot of our inputs from nat gas instead of oil. And unleashing both of those energy sources is going to do exactly what you're describing. It's going to help bring down prices and allow the Fed room to cut interest rates.
And make the climate cleaner. That's the best way. It's the best way to make climate cleaner. I just got to read this stuff. I do this. I can't help myself. I carry it around in my folder. Petroleum, oil impact on consumer goods and whatnot. Antifreeze, antihistamine, ballpoint pens, bandages, beach umbrellas, cortisone, computer keyboards, detergent, eyeglasses, golf bags, iPads, laptops, shampoo, shaving cream, shoe polish, tennis rackets, toothpaste. I can't go on. We don't have enough time. But, I mean, there's a list of several hundred items at least. It permeates it. All right. Arthur, you, I believe, favor Mr. Trump's tariff diplomacy, both with respect to the economy and foreign policy. And I have a little picture for you we put together because Mr. Trump loves President William McKinley. So we've got a picture of President Trump and President McKinley and the power of tariffs. I was ordered by President Trump to read McKinley's biography. By the way, Robert Murray wrote it. It's about 600 pages long, but it's very instrumental. McKinley was a great president. Anyway, Arthur, having established that we all know William McKinley, I know you worked for McKinley. I came in later and worked with Harding and Coolidge. But you approve of this tariff diplomacy, basically.
His negotiation strategy is right on. You know, let me just say that the gains from trade are both comparative advantage and also the capital transfers across country. Those are the gains from trade. And in trade wars, there is no winner. But the losers are not equal by any means. If you get a little tiny country and a great big country where our market is 90% of their business, literally you have a lot of leverage over these countries like Panama, like Mexico, like Canada. These countries, if he negotiates using that as leverage and he can get all that he wants, they should have a retain, stay in Mexico policy. He's using trade as a leverage point, and that's exactly the right way to do it. I see no problems with that. I would hate to ever have to have him actually raise the tariffs on the countries, but if you're going to make threats and if you're going to do that, you have to be willing to carry those threats out. But as a negotiation strategy, Larry, I'm backing him 100%. Right. It's really it's good on Russia. It's good on Saudi Arabia. It's good on these other countries. And I think that's a great negotiation strategy to get them to lower their tariff barriers and their non-tariff barriers.
All right. 10 seconds. E.J. Antoni, 10 seconds. The great Steve Forbes, one of the best economic thinkers alive, is pushing for a capital gains tax cut, bring it down from 24% to 15%, more growth, more investment, and more revenues to cut the deficit, EJ. 10 seconds.
Absolutely, and we especially need it right now after the last 4 years of Bidenflation, because capital gains aren't indexed to inflation. And so if you keep the rates as high as they are right now, people are going to just take an absolute bath on paper gains, not an increase in real wealth.
Boom. Got it. Right there. E.J. Antoni, Art Laffer, thanks to both of you. Appreciate it.